Hey guys, this video will be about engagement letter for tax preparation services. So I will go over the engagement letters that I'm using for individual and business tax return and explain the importance of each section. Let's dive in. If you're new to this channel, my name is Kat, and here on YouTube I talk about different tax concepts. I teach people how to use tax softwares or just teach people how to prepare taxes if that's something they want to learn. So please subscribe to my channel for more updates on all related to tax topics. Let's switch back to the video. So first of all, I'll start with why do we need engagement letter for tax preparation services. It's basically to have a communication and to set boundaries with the client and make sure the client knows his or her responsibilities as well. So for example, there's three main things that we need to cover in engagement letter, and those are: first of all, we'll tell the client what we're going to do, right? So we'll tell him, oh, we'll do this tax preparation, things like that. Then we'll tell the client what we're not going to do. So we'll tell those services are not covered under this engagement letter, they'll be covered under separate engagement letter. And also we can mention, the third thing is we can mention the additional services that we potentially can do, so the client is aware of them, that they are additional, are not included in this in the services we provide now, right? Awesome. So also there is three main things that we should include in the engagement letter, and those are: first one, we need to explain we have a clear intro. So we'll tell oh, this engagement letter is to make sure the client knows responsibilities, and we can tell him responsibility of a CPA company or a tax preparer. The second one is the scope of services. So we can tell the client we're preparing this individual tax return or S-Corp tax return, not preparing 1099s, things like that. Then the next step is, option, what we need to tell the client is to set up the terms of engagement. So when the engagement will be over, so usually it's the completion of the scope, which is, for example, tax return. Another important thing is to tell what? We need to always have a way to escape, right? What if we have a bad client and they don't respond to us for weeks, we can't get the information, deadline is approaching. So we need to make sure we include in our engagement letter when we can do a cancellation of services if the client doesn't respond to us, for example. And the last one will just include different kind of ways to, to solve different kind of problems. So make sure the client knows. For example, the client is getting audited, so we need to make sure it includes that our services is not covered. We're not covering audit representation, but it can be covered additionally under separate engagement letter. So things like that. Well, so this is a main overview of engagement letter, and now we'll go over, I'll switch to my screen now so we can go over the individual engagement letter I'm using for tax preparation and business one, and I can get into more details why certain things are included there and certain are not. Let's dive in. Alrighty guys, so let's start with individual tax return engagement letter. So individual return and business tax return will have a different engagement letter because they cover different things. The idea is the same, right? But it covers a little bit different things. So let's go over individual tax return in engagement letter first. So we'll start with obviously including your information about you, your address, email. That's just basic on any agreement, right? And we'll start with putting a date, which can be here, or the client also can sign the date when they sign engagement letter. So those days, people usually use different kind of automation tools for engagement letters, so nobody needs to actually put the names or things like that. So I just use DocuSign or anything else, or TextDome, or any service you want to send out your engagement letter. So in the end of engagement letter, the taxpayer can put their name, signature, and date. So you don't have to type anything, right? What do I customize? I have a couple engagement letter for different pricing, and that's all I customize. So I know I have this tiers of client have that standard pricing, so I just sent them this engagement letter, and another one have just a different price, so that's all I changed. So it's just different tiers. Going back to engagement letter. So first of all, we'll start with a purpose of this engagement letter. So we make sure we tell the client that we do, so in this engagement letter, we'll have information about the services that we will perform to the client, right? So we start with the scope. So for example, in this case, I included that, or it is included on this letter, that will prepare individual and federal and state tax return as reflected on your prior year return for the year ended 2023, right? Unless discussed in writing. So this way, the client can go back to you and tell you like, oh, where is my whatever additional tax return? Like, let's say he never told you he needs to file FBAR or things like that. Then they go back to you and like, oh, you haven't filed it. I was like, okay, I haven't filed it because as we mentioned, the same as in prior year tax return unless told otherwise. So that's a good thing to have on your engagement letter. And then it says that we're not going to prepare any additional tax return without your written request. That, I think that makes sense. And we're not going to prepare financial statement, things like that. And tax return will be provided on the information provided to us. Here we have basically telling that we preparing tax return based on IRS regulations, which really makes sense. And things like that. This section, when we say that our engagement doesn't include any procedures designed to detect errors, fraud, and theft, things like that. So it pretty much tells like we're not auditor, we're not going to audit the information we receive. We prepare information based on information we received. Engagement letter is a perfect place to include additional services. So we want to make sure we include this is what we do, but we can be engaged in additional services that will be required additional engagement letter. So that's a good thing to do it. And here we go. So we start with CPA responsibilities, right? So we pretty much tell that, so if we prohibit us from signing a tax return unless we have a reasonable belief that there is substantial authority for tax position taken on the tax return, or we have a reasonable basis for the tax return position. So it pretty much says that how we prepare tax return, we have a reasonable basis for the tax return positions taken. If you request that we report a tax position on your return which we feel is contrary to published guidance, we will unable to proceed, right? So we pretty much tell, if you tell us to include something that we don't agree, and unfortunately we have to terminate our contract or this engagement letter. So we would be unable to proceed. So that's a good thing because sometimes clients force us to do something, but we don't have to do it if we believe it's not correct. So this is our responsibility. Make sure to prepare tax return based on reasonable basis and based on our, our knowledge and things like that. This thing, it's kind of important that we're not taking any management decisions, so we have nothing to do with our management or things like that. I think that's kind of makes sense. For arguable positions. So it says that we'll use our judgment to resolve questions in your favor where a tax law is unclear if you have reasonable belief that is substantial authority to doing so. I mean, if you know this is how it should be done or makes sense based on our tax law, that will include that. So that makes sense. If there is a conflict, we will explain the possible positions that may be taken on your tax return, and we will follow the positions that you request, provided if it's consistent with our tax reference materials. So it's pretty much if you have some, arguable position, we make sure and we agree with that position. But we can still we have to present it to the client to make sure they know if it's something that is arguable. Confidentiality, I think that makes sense. Both spouses has to sign tax agreement and tax return, so that's for married filing jointly. Okay, so that's the thing. Pretty much it's kind of says about individual tax return has a clause about marine filing jointly. Estimated tax payment. It says that we're going to calculate estimated tax payment, and that's something you can include or not, depends how you do your business. But usually I do, but we have no obligation to update recommended payments after engagement is completed. So after we prepare tax return, we don't have to update it, because a lot of clients go back to you and they're like, please update my estimated payments based on 1, 2, 3, 4, 5 that have changed for them. So we don't really have to do it. We can create a new engagement letter. Tax planning services. So it says that our engagement doesn't include tax planning services, but we can, and during our course, we can, technically bring to their attention potential tax saving strategies for their consideration and for future years. However, we have no responsibility to do it and things like that. But we can offer tax planning services as additional charge. Government inquiry. So those are like if the client get audited and we have to deal with a government agency or tax authority. If your tax return is selected for examination or audit, you may request our assistance in responding to such an inquiry. If you ask us for representative, we'll confirm representation in a separate engagement letter. So that's additional service, and we'll do a separate engagement letter. We will not respond to any requests from banks, mortgage brokers, other verification. I think that just we can't just do it for a client. If they want, they can share that information with a third party, but not us, right? Any advice we may provide is based upon tax materials, facts, assumption, we will not update our advice after conclusion of engagement for changes and all this kind of stuff. So it pretty much says that our considerations, advices are based on current tax law. We're not going to update it if the tax law changes or things like that. Reliance on others. So that's a good provision if, for example, you have a complex tax return, if you want to get second opinion of another CPA or another tax advisor. So, and it includes that we will use this like realistic possibility more likely than not as for us to decide, for us to offer that option to the client. So that's a good thing to know, so we can have a little bit more space when we prepare a tax return. Substantial understatement penalty. So those things, if the client underpays the tax and things like that, that we make sure they know that they will pay penalties. Because sometimes the client, we can file tax returns, they don't pay their tax due, and then they get back to us, or why do we have additional tax penalties or things like that. So it's nice to include that. Here is about reportable transactions or tax shelters. So it pretty much says that they have to do this and they have to tell us. So they have to tell us about those reportable transactions. And we tell the clients that they acknowledge their responsibility to pay a penalty if they fail to disclose a reportable transaction. And here it says what reportable transaction is. So that's a good thing to know, right? If the client didn't tell us, we don't know, and like at least he has to know. Okay, and here we go, client's responsibility. So we'll start with, they have to fill up our questionnaire and worksheet when we request specific information. So that's something for us to make sure the client know and we know, and it's super helpful for us when we have those things fill up. Completing this form and gather information. And like some expenses that they make sure that meals, entertainment, travel, business gift, those things are separate because in records they have records as required by IRS. They are responsible for retainer or documents, cancel check, and things like that. Investment advice. So we don't provide any investment advices, right? And yeah, it can be just done from investment advisors. CPAs don't do it. Fees and billing. So here we say how much our fee is for what we do. our fee for the service will be this, and can be additional hourly rates for additional work done, things like that. And then we include when it is due. Well, this is pretty much says that will be based on different things, but our fee is this amount. So I think we can just include this separately to make sure the client sees that. Dispute. Well, this is basically any arbitration will be government. It's a general thing about arbitration. It's usually it doesn't really happen as much. It's just more like a law terminology. Termination and withdrawal is important because we need a way out. So EB reserves the right to withdraw from engagement without completing the returns if you fail to comply with the terms of engagement, right? If they don't do any of those, like don't pay us on time, don't provide things or whatever, then we can get. Well, you can even include that for compensate out of the pocket expenses. Yeah, why not? And here's pretty much client says that he read all the engagement letters and they will sign it. Okay, cool. So now I hope you liked, hope it was helpful. So lots of things, right? Again, now we're looking at business tax returns, same idea. So what do we do, what we don't do, what we possibly can do, and we make sure we protect ourselves. So here we start with, like, for example, we do S Corp tax return, and here's the form, here's when it's due. I have a due elsewhere. So here's the same. So we do S Corp tax return reflected same as in prior tax return. We will not do any additional tax return. We'll do it based on IRS regulations. We're not going to audit financials. The client might add additional services if they want. And here we go. CPA firm responsibilities are pretty much the same as it was for individual, because it's kind of similar. We have the same responsibility no matter if we do individual or business. It's a little bit different for, for clients' responsibilities. So for clients' responsibilities, I added that they will provide us with the financial trial balances and other supporting information. Make sure they include us if the income was from sources out. If there's income from outside US, they have to let us know. They are responsible for saving all these documents. And here we go. Depends on organization structure. I added that for make sure, so they give us the information that is correct. So for partnerships, the super important is partner salary. For trust, they'll calculate accounting income. We're not going to audit that. For S Corp, make sure they include us as salaries for an S corporation, so they are responsible to determining the appropriate salary and wages. Because technically we can give them advice if you want to, but they are responsible to determine appropriate. And here it pretty much says that S Corp has to issue wages, and they make sure they do that. For C Corporation also, that they are responsible for determining the appropriate salary and wages for shareholders. Well, so this thing here with the C Corp, they have this wages versus dividends. So sometimes it's not really salaries, those dividends. So we make sure, we take that responsibility out of us. We can give advice, but the client is responsible for determining that, or it can be a different engagement letter. For a nonprofit, make sure they if they produce any revenue from trade or business activity not directly related to tax-exempt purpose, it might be unrelated business income, so they have to responsible to let us know about this. Documentation, so make sure they save all this documentation, personal expenses, so it's separated, and they confirm personal expenses. Employment records, worker classification, so if they pay somebody more than $600, they are responsible for issuing 1099s. State obligations, local obligations are not tax return. And for foreign investment, if they have foreign investments, they make sure informed if you directly and indirectly hold any interest or assets in foreign, right? And they will be required to verify and sign and complete the signature authorization form. And that's kind of it. And then we also have how much our fee is and when it needs to be paid. And they have to sign the agreement. Important here is to basically tell them that, let me see. You received this letter because we understand you are the person responsible for tax return matter of the S Corp. So if this is not correct, tell us who a tax matter shareholders is responsible. So that's the thing. We kind of like, we assumed that they are, and if they're not, like they have to tell us who are the person responsible for tax matter for a business. So those important things to know. Well, so that's it. I hope that it was helpful. Thank you guys. Hope you guys enjoyed this video. So please watch this another video about potential risks and mistakes that people do in engagement letters. If you're interested in that, also I have lots of videos on different tax software, different tax topics. So subscribe to my channel, check it out my website, remotecpainla.com, where I sell online courses, or sign up to my email if you would like to get a copy of engagement letters that I was using in this video. Thank you so much. Have a nice day.